What's going on, people? So I just wanted to start the video off by giving some appreciation out to everyone who is viewing the channel, everyone who is giving some support, everyone who's liking the videos, everyone who has subscribed, and anyone who has shared any of my videos. I really appreciate it, and I really want to reach as many people as possible to be able to provide the value and the information to as many people as possible, really. I just wanted to give a reminder out that I do post on my community tab quite frequently, or at least once or twice a week. So if you haven't even got the notifications turned on at all, then maybe just go turn on my notifications just for, specifically the community tab. Because basically what I do is I post on there and I let people know, what kind of videos I'm thinking of making, for the week upcoming. And I give you the opportunity to be able to select and vote on which video you would like to see. I also wanted to just say that my Instagram has just reached 2,000 followers, which I'm really appreciative of. If you have Instagram and you haven't followed me, go check out my page. I'll link it in the description below. And I also just wanted to give a quick update on the first giveaway, which will be happening on this channel. If you have watched my recent giveaway video, you will know that what I'm going to be doing with all of my YouTube profits is I'm going to be giving them away to you guys. So currently I'm about halfway through the threshold, which allows a payout, and that's in the time period of about 20 days, which I really appreciate all of the support, like I've said. And if you could keep up with liking the videos, commenting on the videos, what helped you, what didn't help you, and if you haven't already, subscribe to the channel, because the faster this channel grows, the more giveaways that I will be giving to you guys. I really want to be steering away from the technical analysis side of things on this channel, because I feel like what I've done is I've provided so much technical analysis stuff that it's, I've provided plenty of stuff on there which you should be able to sieve your way through and be able to, piece a lot of things together. And what I want to do is start focusing more on the psychological side of things, because this is something that really, maybe you have been told that, psychology is the most important part about trading, but you haven't really been taught anything. What my aim is I want to break the mold of just looking at technical stuff and really make it apparent of how important that the psychological part of trading actually is. And you should trust me on this, because I've been within the markets for the last 7 years now. Only over the last 3 years have I really taken trading seriously. And the reason that my journey has been such a long period of time is because the psychological part was not there for me. So what I want to be able to do is be able to speed your journey up by helping you with the psychological parts of trading. I tell you one thing, if I had all of the information, all of the YouTube videos, all of the the courses and different things available on the internet when I first started, my journey would have been a lot quicker. Now, don't get me wrong, this journey is not easy. It's not going to be quick. It is going to be, study intensive. And if you haven't got the grit to push through it and, all of the ups and downs, right, you're not going to get through the other side. So with that all out of the way, let's jump into the video. I want to kill two birds with one stone, because I really want to be steering away from the technical side of things. So in this video, I'm going to be sharing two things, one being the break of structure, and another one being one of the questions that I've been asked several times on this channel, and I'm going to be answering that question. So make sure you stay to the end of the video so you can get the simple answer to the question that I've been asked the most. So getting onto the break of structure side of things, the first thing that we really need to identify is what are the timeframes that we're actually going to use for our structure. Now, if you've watched the previous video titled Pre-Session Market Analysis, you will understand which timeframes I use personally. If you haven't watched the video, go check it out here. So I'm going to be covering the 3 different types of BOS or break of structure in this video, which we use here at PawnFX on a daily basis. So the first thing you want to be doing is going down to the daily time frame, and I'm just going to be using a blank chart on EURUSD here just to give you a clean understanding. So first off, we're going to start with the notorious break of structure. Now, true break of structure is actually what we call swing structure. This is basically how we define the range in which we are trading within and where we can actually look to potentially continue to trade price in the given direction that the market is currently moving. So for break of structure, how do we identify where a break of structure is? The way that I identify breaks of structure is by having a set measurement in the market. Now, what you want to do is have a set measurement for each time frame, right? You're going to have specific measurements for, in my example, the daily time frame, the 4-hour time frame, and the 15-minute time frame. Now, it's not my job to give you these measurements. Ultimately, what you need to do is go through the market yourself, take measurements, And I would say take at least 50 measurements on each time frame, and then what you want to do is add them all together and divide them by however many times that you've taken the measurement, and that will give you the middle number, right? So let's just say, for example, you do 50 measurements and you get X number, divide it by 50, and then what it's going to do is going to give you a number, obviously. And let's just say, for example, that number is 72, right? What you're going to be doing is you're just going to round it up or down to the closest, high or low, right? So 72, I would say round it down to 70. And then you basically just repeat this process for each time frame that you want to use structure on. The way that I like to mark off breaks of structure and our swing structure is by using this arc tool right here. So what I will do is I will say, this is my high in which I'm interested in, if price breaks above that, then what I'm doing is I'm shifting my bias on the daily time frame, and then you can have, set templates for each of these, and then you can just make them, for example, a thicker line for a different time frame. So this is theoretically now the strong high, and the way that I mark that out is with an arc, but a full lined arc, right? And then if I want to identify the low, what I'm going to do is draw an arc there, and then I'm going to have it as a dotted line, because that is now a weak level. So basically what you can use this for is by zooming out onto the chart, and you can quickly see where is the strong high, where is the weak low. Now we've just got a quick diagram here, and what we're going to do is do exactly the same thing, right? So we'll use the curve and we'll say, right, this is my strong high, because ultimately using the measurements in which you've gathered data on, this is going to be the area in which should hold to continue price in the current direction. Now, same again, we can mark off this low and we can say, right, this is our weak low, okay? So this is our dotted level. So these are our break of structure levels, okay? So we can mark off a line from here and we can put that level there, right? And then we can go from this low, and then we can mark off a level here, right? So we know where our swing structure is. We understand that theoretically what should break is the low, right? So we can go all the way up to that high before we look to shift our daily direction. Now this is where the main information is. This is where many people get confused, and this is why many people get slammed, because they don't understand the difference between a break of structure and internal structure. So let's cover that now, right? So we clearly see we have our swing structure high and we have our swing structure low, right? And obviously this would be in a bearish market, right? Now, the next thing that we have is a internal break to the upside, right? Which would be this level here, right? So this is more of a less meaningful break to the upside, because what we're doing is we're still trading within the daily swing level. So you might be saying, well, how do I identify an internal break of structure, right? So if we look to the left-hand side, we can clearly see that this push up didn't break anything in this previous push to the downside. So what does that mean? We are basically internal inside of this daily previous leg here, right? So we haven't broken anything inside of this daily leg, which means once we put in this high, then we get the pullback and then we break above that level. It's only an internal break of structure, because we are breaking internally inside of this previous leg. Now, same again, what we have is this high goes, and let's just duplicate that, right? So same again, that is another internal break of structure, because we haven't broken anything inside of this previous leg. So hopefully you can make simple sense of that. What you can do is go into your charts, get your measurements, make sure that you understand where the swing structure is, and then you can start looking at the internal breaks of structure to the upside or to the downside, right? Because ultimately, an easy way to understand this is internal breaks of structure are counter trend to the actual trend, and they also have to be inside of a previous leg. And then the third and final break of structure that we have is a minor break of structure, right? So same again, we have this low gets taken out. Now, inversely to internal breaks of structure, minor break of structure is pro-trend in the direction that the market is moving. So as you can clearly see, we are still within this previous daily leg here, but what we now have is a break of structure to the downside from the internal break of structure up. And the way that we mark minor breaks of structure is we start from the left-hand side and we always go to the right, okay? So this can be some sort of substructure, right? This level here can be taken out, right? And that can be a lower time frame structural level, which gets taken out. And same again, once you have your measurements, you can then figure that out for yourself. But once again here, so we have another minor break of structure, and then we push down to this level here, and then we pull back up, and then we finally get that break of structure, okay? So then what you can do, same again, is measure it, see how far this pushes down, see how far this pushes all the way up, right? Measure this from this low to this high, see what that measurement is. If that lines up with the structural measurements in which you have taken, then this can now be your new structural high on the daily time frame. So what you can then simply do is move this arc tool down to here, right? And then this low has been taken, and we don't know where the next low is until we then start getting that next pullback. So then what you want to do is obviously use premium versus discount, market structure, POIs, order flow, liquidity, anything, whatever your system tells you to use. So hopefully that's a simple enough explanation for what the three types of break of structure are, how you use them, and how to identify them. Now, as I promised at the beginning of the video, I want to kill two birds with one stone, right? So one of the questions that I've been asked so many times on this YouTube channel, in the comments, and just general messages from people on Instagram asking me, what is a flip? Let's just think about the word flip here. What we want to do is make things simple for ourselves, okay? So what is a flip? So the Google definition here is turnover with a sudden, quick movement, right? So that's just the simple definition of a flip, right? So then if we get back to the chart, what can we anticipate that a flip actually is in the charts? What we can do is we can identify that as we use POIs, we have this down close candle here, right? Which breaks this structural level right here. And same again, I'll leave you to identify which structural level this is. We're currently looking at September 2021. If you want to go back to this price action and have a look, you're absolutely welcome to. Now what we can see here is because of this break of structure to the upside, we have this POI here, which we could potentially be interested in taking longs from. Now what actually happens when price comes back down into this POI is we actually get this bullish up close candle, which signifies to us that there definitely was some large institutions or players in the market trying to buy from that level. Now once we finally get that break to the downside, which actually takes out the low of this level here, what we then have is a flip. So we had bearish movement, right? And then we had a bullish POI, which basically price came back down into, reacted, and then broke straight through it, right? So now we have buyers which were potentially in the market, which have now flipped to sellers, right? So this is a simple shift in dynamic, looking from buying to selling. So what do we identify as the flip POI? Basically what we want to be doing is we want to be identifying the up close candle, or the largest up close candle, or most recent up close candle inside of that flip zone. So as we can see here on the daily time frame, we have this up close candle, and then we have this push that goes straight through. Now if we pull this new POI out, what we can clearly see is price comes back very, very nicely into this flip zone and then crumbles from there. So I'm sure you know we all say that you need to make things simple for yourself. Think about it. Why is it called a flip? I've just given you the explanation, so hopefully that really helps you out. And what you need to take on board is the fact that the market is fractal. So every pattern that you've learned on this channel, on someone else's channel, on whoever's content, basically the same thing will happen on every single time frame. What you need to do is be able to get in and refine this and be able to find out how you can get into the market by using these higher time frame flip zones as potential POIs. I hope you enjoyed the video, people. Like I said, I think this is probably going to be my last technical analysis video for a little while now. We're going to start looking at some psychological stuff and ways to break out of these psychological issues that pretty much every trader faces. If you have any ideas, let me know in the comment section below. Thank you for watching the video, and I'll catch you guys in the next one.